And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Sunday, September 6th, 2021. Not much to be adding, but I have now continued to put some labeling on. And I have put the minute wave 4 here, and that would be minute wave 4 up minor wave 5. And that suggests that we are now in a minute fifth wave up to complete minor 5, intermediate 5, primary 5, cycle 5. So we continue to build and finally possibly reach this long time high that I have been waiting for now for quite some time, as the market just continues to push and push and push. Now, on Friday, we did get the employment situation numbers, and that produced an initial negative reaction from the market. But that was replaced immediately by some very strong buying, and it all came right here in the NASDAQ. And it was primarily focused again in Apple, Amazon, Google, Facebook, Microsoft, et cetera, et cetera. So initially, the reaction to go down was based on the employment situation numbers. They were a little bit of a disappointment. Then adding that to what we had earlier with the Jackson Hole meeting from the Fed and all of the investment people and the bankers saying that they may start to taper this year versus next year. So we continue to have this buildup of what could be perceived as negative for the market just be sidelined as the buyers push right on in and just keep the rally going. Now, on an Elliott basis, we've been looking for this, but when it kind of goes against the news, you begin to wonder. But then again, as I've said many times, when using Elliott, Elliott doesn't know anything about the news. Elliott does not take news or fundamentals into consideration. It is purely based on human behavioral patterns. It's psychological patterns that are repeated over and over and over again in the market. And therefore, they become building blocks. And that's how we continue to get up to this high, because the building blocks have now signaled that we're finishing up to a cycle degree level. And actually, I can go one above that to a super cycle degree level that we're completing a third wave. So on a minor, we're completing 5, intermediate 5, primary 5, cycle 5. So we are staring in the face of what I do perceive as a larger, longer term corrective pattern. Now, that's not going to be the end of the world. My initial analysis does show that we're likely going to have our first stop will be back at these levels, because that's a fourth wave. It's going to provide support, but I believe that we'll eventually end up, and it might only be wave A of this supercycle degree fourth wave, down at the March 2020 lows, and then we'll go from there. So there's going to be plenty of great trading opportunities, and for swing traders, for position traders, for option traders, for day traders, and every level, there are going to be magnificent trading opportunities in both directions. And the volatility picked up. So a lot of things are going to take place, but first we need to complete what we're doing. So in the Globex session overnight, we did break twice above 15,700, and we got up to almost 709. And then just this afternoon, or actually this morning, I'm going to say, we got up to 15,703. So right now, 709 is the ticket to break to start moving again to new highs. But I have been expecting and anticipating that this is what the the NASDAQ intends to do. Now, continuing this rally, we have resistance at 15,721, and then we go up, and I think that 21 just maybe provide a small pause, but nothing any too serious. And I think that depending on what the Asian markets intend to do, and then again the European markets, being that we were closed today, I don't think that we're going to see a lot of activity from towards our markets from those. And so it may be more of a reaction in either direction to what's happening within their own markets. But I would suspect that we're going to see 15,721 just taken out as it then continues to head up. Now, the large numbers like 15,750, 60, those larger round numbers, they should continue to provide some resistance just because they are that round number. And we are in uncharted territory. We don't have levels that we can base on. We go on our Fibonacci relationships between the waves in progress. So what I've also added, and that is actually what I think I put on Thursday's update for Friday's trade, and an estimate that this would hold, even though we had the potential for the market to drop down to 15,522. In fact, we had to where it could have dropped, yes, all the way back down to those lower levels. Yeah, 15,522, which is basically where the 200-day moving average is sitting right now. Could that still happen? Yeah, I suppose that it could. This could be A, this could be B, and we drop in a C wave again, and that would put us right there. I'm not really expecting that, to be honest with you, but stranger things have happened. We also have tomorrow's Rosh Hashanah, and then there is historic value to the fact that between Rosh Hashanah and Yom Kippur, that the market tends to be weak. All of them, they tend to sell off a little bit. So we might get that. And that would just be an extension of this fourth wave. So while I'm labeling it there, remember that the markets are fluid. That means that our counts have to be fluid as well. And we're not going to be breaking any rules if we push this out and it comes down to here. It all fits, even though it's continuing to inch to new highs. This is a new high by $10 because that old high was $15.99. So it's not by much. And again, A could be B, and then we drop in a C wave. If it does, it's going to be 5 waves down. It should go fairly quickly. I will add that. Let's just open this up so we can take a peek. Look how flat all this is. So it really should start to open up and accelerate lower. If it's going to do it, it should break the 50, start heading down, break the 200. This is on the 15-minute chart, and come on down and break below that. Now we're back up to that 15,022 level. So that would bring us all the way back down to here, which would put us right down there at that low, which is the previous fourth wave of 1 lesser degree. So that's where I would think that we're going to go for this fourth wave. I'm leaving that right here for now. If this doesn't, and we just pull up and we continue to move up, then the 4's here. If anything, I could probably move it out to here to clean it up a little bit, but I'm leaving it because this is all very, very sloppy. So that's why I'm including the fact that we may just be reaching up and finishing A, B, and then we get a C wave. But this would then have to be 1, 2, and we really should start to accelerate. Whether it happens once Asian markets open or whether it happens when European markets open, it should definitely happen when we open in tomorrow morning. And it should decline rather quickly. It's not going to be the devastating C wave that I think that we were being set up with previously, or what we might expect in this much larger correction coming down the pike, but it should be big enough. We're still looking for the possibility of the market dropping well over $100, $150, $160. And if it does it very quickly, it's going to seem like, whoa, what are we doing? Similar to this. So we continue to have that. And that drop can happen across the board in all the markets, and then still fall back into line and rally to those upper levels that we are continuing to include. Now, what will change is if this 4 gets moved down, if the market does decline in a wave 4, and we move the fourth wave over, then of course the calculation for minute 5 will change as well. And we'll pull that in to whatever level this comes in. Right now, this is where I'm leaving it because it's pretty much equal to that one. So I just placed it there, and that's what's going to stay unless the market tells us differently. So we're allowing for that possibility. But as we come down here, you can see momentum kind of waning, maybe starting to angle back up again. So maybe downside's over, who knows? So what can we see for tomorrow? Exactly what I just said. If the possibility is that this is going to turn into A, B, and we're going to get a C wave, totally a realistic look, totally has strong potential, totally has higher probabilities as well. But we have to kick it into gears to give us the clues that that's exactly what's happening. That's going to come with the breaks of the moving averages. And then again, right there on the 15-minute, that 200. If we go back down to our smaller charts or even move it up to our 30-minute chart, then we're looking at 56.17. Going back to the hourly chart, it's going to be back at that higher level, which is going to post right down to there. And you can see that. I put it at the low of wave 4, and it's going to intersect right there at the 200 at 15,523. So if this is a C wave down, that's where I think it's going to go. And then we'll begin and we'll start to rally all over again and push on up back above 15,700, back above 15,800, because I do believe when all is said and done, we're getting up into these clusters up here. And 16,000 is not unrealistic or out of the picture yet. Because remember, 16,000 is minor wave 5. So that stays in place because this minor 4 ain't changing right now. So that stays in place. What will change is the levels for minute 5. And right now, off of this level, they're up here. So bringing it down here, it's going to pull these numbers down a little bit, but this one's going to stay. So right now, our cluster is just above 15,800. Then we have some more 15,900. So you see it spaces out pretty quick and then up here towards 16,000. So right now, without this dropping down, this is the zone. 720 to 808, 809. Those levels remain in serious contention to complete this. And this is where I'm going to leave it for now. Now we're going to let the market tell us. Again, trade what's in front of you. Trade according to your moving averages. We now have a picture. If the market decides to decline strongly tomorrow, which it absolutely can do, then we know what we're going to be looking for and we can plan accordingly. If it does not, but comes down and holds our moving averages and begins to rally again, we've got our marching orders for it to go up. So again, trade what's in front of you, allow the market to tell you where it wants to go. Next update, Tuesday, September 7th.